Is this the best monthly income ETF on the market right now? Today we are investing $10,000 into the Defiance S&P 500 Target Income ETF, ticker SPYT, just to see what your returns would be, specifically with those dividends as well as price appreciation. If you guys are new to the channel, you might not know that I'm not the biggest fan of the Defiance ETFs. Mostly because our weekly dividend account, the Defiance ones have really underperformed, which is not good by any means, but SPYT until the last couple of weeks was doing pretty well. I will say this one did definitely surprise me, and so I'm interested in seeing the total returns we would get out of this ETF. It's definitely my favorite by Defiance. If you guys don't know who I am, my name is Spencer, and I talk all about dividends, investing, all sorts of things. So if you like that style of content, don't forget to like and subscribe to the channel so you don't miss any of these video updates. It's totally free information for all you guys. With all that being said, let's roll the intro. Quickly, just a look at the chart. We can see it's only been trading for about a year. It started trading March 18, and it is down 12.16% over the past year. Most of that coming from the last couple of weeks, even, where it's down 9.5%. It's been rough. All of these ETFs are down. The whole market has been red. Even SPY has fallen, 7 or 8% from all-time highs. So it's just been rough. It's been a hard time in the market. Everyone knows that. So I'm interested in buying some things that are on discount right now, and maybe SPYT will be one of them. We're going to run a number of calculations on this. We're going to factor in this loss recently and another better case scenario where we don't factor in this loss and just track the data from before we saw this crazy red market to get a better picture of how it does in a normal market versus this market versus a good market, and all of the above. So I hope you guys enjoy. Before we jump into our calculations, let's take a look at their website and see everything that SPYT has to offer. So from my understanding, XPay and SPYT are relatively similar, no? Because they are also targeting a 20% return, which, is great. They're both paid out monthly. We have one by Defiance, one by RoundHill. I wonder how those two would compare against each other. Maybe I should do a full video on that. But SPYT, we can see distribution rate 20.06%, and it pays out monthly. No complaints there. They aim to achieve a target annual income of 20% in the S&P 500 using options paid out monthly. So, target annual income. This is not just total return. It sounds like it's just based off of the income, which could be a negative if this thing continues to fall. But like I said, prior to the last couple of weeks, it was doing really well. It's actively managed. Let's take a look. Do they have their what the expense ratio on here? Income generation, trading, it sells credit call spreads on the S&P 500. Pretty similar. Here we go. Premium discount, no. Expense ratio, 0.87%. So a little bit lower. Not crazy lower compared to some of the other ones, but a little bit lower. So if you're comparing two of them and they're pretty close in what their returns have been, that might be a factor that weighs in there. But to be honest, I never really thought I'd like any of the Defiance funds, and then SPYT in our high yield account has been really performing well, except for the last couple of weeks. So we can look at the performance over the 1 month down 1%, 3 months 1.5%, 6 months it's still up 4%, and since inception 13% and 14%. And I'm guessing this is cumulative. Yes, so this is with dividend as well, I believe. Not bad. Not bad. We can see the top holdings, how they write their options, the distribution calendar, and we're going to check out another calendar. Let's check out the Seeking Alpha for their dividends because I like to get a different perspective and see the chart on there, which is really interesting. But so far, first looks, it's not really my first time looking at Defiance, but first look for this fund is decent. I'm not complaining by any means, and I'm curious how the drip calculator is going to look because I think that'll be a really big factor on if I were to buy this in my Roth IRA or not. All right, SPYT on Seeking Alpha. We can see we actually only need 1 year of dividends, and it's all the same anyway. We started out at 34 cents. It's bounced around, looks like the low of 33 and a low of 32, which was the most recent, and a high of 34. Very consistent. And the reasoning behind that, I imagine, is because they're trying to hit that 20% every single month, which is key. So we can see the numbers they do bounce around ever so slightly. It's not terrible. This one was really low, actually, at 31, which is not good by any means, but we'll see what happens in the market. I don't know. I'm not an options expert, I will say. So when we see a market like this, I'm not sure how it's going to directly impact some of these funds. I know volatility goes up, which is usually good, but sometimes when the price continues to fall, it's hard for them to recoup their money that they have put in, depending on when the option contract expires or not. So there's a lot that goes into that. If you're not an options expert, it can be really confusing. Like, to me, it is also still really confusing. But definitely an interesting thing to look at. We look at the dividend yield. They have it as a 22.5%. That's off of the last payout, or actually, no, this is a full breakdown. So it's all the last payouts, and then you have the trailing 12 months of $3.97. The way they calculate this a little bit, though, because we've seen a price drop in SPYT, the dividend has gone up a little bit. So they're probably still going to target that 20%. I doubt they go too far over it, but the dividend yield is very, very solid for this one. And again, I'm curious how it relates to XPay, because XPay is newer, I believe. I think it is newer. So maybe Defiance has the one up on RoundHill. On this one, it would be probably the first time that it has, because like I said, the RoundHill weekly pays are a lot better than the Defiance weekly payers, but it's interesting regardless. So let's throw this into a drip calculator and just take a look at what the total return would be had you invested initially when the fund first broke ground. Using dividendchannel.com, as you guys know, it's one of my favorite ways to use this drip calculator. We have SPYT plugged in. There's also a ton of photos of Elon Musk on here, so if you want to just look at some photos, you can do that too. 10K invested at the inception of SPYT. Total return, 7.66%. Not great. It's only been 1 year, and you're only getting 7.6% when S&P 500 is returning, what, 20-something%. So, but there's a lot of things that factor into this. We are really beaten down, and with drip on and drip off, it doesn't make much of a difference. We can see total return 7.69% versus 7.66%. You're actually better with drip not on, and the reasoning behind that is as you continue to buy every single month, every time you get paid a distribution, you're now raising your average cost value, right? You're paying more and more and more, because if you bought here initially and now you're paying at this price, boom, you're kind of stuck. And that's the thing. That's why I like drip for these, but when they're really beaten down, it's harder. And it's, in my opinion, it's better when they're beaten down to have drip on than when they're at all-time highs. The way I invest in a lot of these, I just turn drip on. I don't look at it. It might be something I should look at with my portfolio, with how I invest. But all in all, I'm just kind of a lazy investor. Let's be real. You guys know it. I know it. We're not going to hide it. So one factor too is this thing, even though it's only up $765 on your 10K investment, at one point it was up well over $1,500. So you would have had double the return, giving it around a 16% return compared to what it's trading at right now. So that's something definitely to think about. It's because of this crazy market that we've seen a lot of these ETFs pull back. And one thing I do want to mention is normal stocks, with how they trade, have a higher chance of returning to their normal price compared to these option income ETFs. It takes a lot more time for these to grow back. You're focusing more on the dividend payments still. And so the price fluctuation, it's different, because these ETFs aren't just a company that can grow in a specific way. They're more limited in a sense, and that can make it more complicated. So if you're hoping to buy one of these, like even QDTE, sometimes it'll bounce around. The only ones I've really seen are the YieldMax funds, like MSTY will go from like $30 to $50. Most of them don't do that. So those are some special case scenarios. But when it comes to these lower yield, kind of lower risk funds in comparison to the higher crazy returns of the YieldMax ETFs, you're probably not going to see that as much. So it really depends on your investment style. And I like to point that out. It's good information, I think, for those if you're new to investing or old to investing. If you're used to it, you guys probably think the same. And if not, let me know in the comments. Let's jump into our calculator and see the returns that we would get with SPYT, because I think it's going to be a good one. We're going to start out with the worst case scenario when it comes to SPYT. So I have everything plugged in. We're using MarketBeat. Their dividend calculator is really, really good in my opinion. And I'm going to tell you how I got this initial annual dividend yield. Well, I factored in the price decline that we've seen, which is about 12% from the dividend yield according to MarketBeat, which was 22.95%. So we're getting about 10.8% initial annual dividend yield. Now, in order to calculate this for drip, I have to have it set to dripping annually, not monthly, because this is a 10.8% return on the year annually compared to monthly, which we'll do in our next one. And while this does pay monthly, because I had to factor in the price decline, this is a more accurate way to do it, if that makes sense. So we have 567 shares at a share price of $17.63. And after your first year, you are getting $1,195. Well, that's what you're going to have after your first year. So your total dividend payments for the first year, $1,080. Not bad by any means. This thing really picks up, and definitely when you factor in the price decline that we've seen recently, it really hurts the returns. Now, if you didn't factor that in, which I will do in the next one, it makes such a big difference, because even though this market is in the red, we have not seen a red market like this in a long time. And so SPYT, the first, 10 months would have been a really, really solid investment. Now, when we kick it up to 5 years, we can now see our total dividend payments over the first 5 years, $6,691, which is really, really insane. And our annual dividend income is now $1,800. Our 10K is now worth just under $17,000, and it's just going to get better from here. And what I like about this is it's a more realistic look. Even though the best case scenarios are more fun to watch, this is a realistic way of looking at what we've seen in the market recently. So even with the downtrend and being down 12% the last 2 months, it's still a really, really solid return, and a near 11% return is very, very solid. If you're a new investor and you're like, well, YieldMax, they return 100%, they don't usually do that, and so there's a lot of factors that weigh into it. After 10 years, your 10K is now just under $28,000. Total dividend payments, $17,861, which is really solid. And now your moving forward annual dividend income is $3,000, which again is lackluster compared to some of the others, but it's just a lower risk, lower reward is how we see it. We're going to kick it all the way up to 20 years invested. And here's where the compounding really starts to take over. Your ending balance, you're now up from $10,000 to $77,000 in 20 years. Total dividend payments, $67,600. And our annual dividend income, $8,400. Now remember, this is based off of this dropping in price by 12% every year, which is not realistic. We don't know what it's going to do every year, but I doubt it's going to fall by that much. And it's still outperforming that 20% target, even if it is dropping pretty substantially. So really solid in my opinion for what we've been seeing. And the annual dividend income, $8,400. It's just something to help you grow your account. You're not going to live off of it. But let's see 30 years. So I like to run this scenario all the time. Let's say you're 25 and you want to retire at 55. So you invest 10K into SPYT and it performs the worst case scenario that we've seen in recent times. What ends up happening? Can we retire? Well, not quite. We're getting there. It would take more time for sure. We have made a ton of money because over that 30-year period, our $10,000 is now worth $216,000. So you could sell it and live off of your total return so far. But living off annual dividend income of $23,000 would definitely be tough. Again, $206,000 in dividends paid out over a 30-year period based off of the worst return that we've seen is really, really solid. So what I want you to do now, check this out, because the best return that we've seen is going to change these numbers substantially. Now for the fun part, the best case scenario. We have it all plugged in the same way. I have changed the distribution frequency to monthly, and we have the initial annual dividend yield of 22.95%, which is what MarketBeat says their dividend yield is. Now, one thing to note too about this is I'm not including any increase in price, which we have seen it bounce back. So if you were to buy it at $17.50 and it runs back up to $20, $21, you are going to get a much better return, but I'm not factoring that in. So this might not even be the best case scenario that we could consider, but it's what I'm going to do. So we have 1 year invested. With just 1 year, it's already insane the difference with the monthly compounding, how it was factored in. It's crazy the returns you can see. $3,000 in annual dividend income moving forward. Your first year, you were paid $2,300 in dividends, and your initial $10,000 is worth $12,500. It's just so solid. And what I like about this fund is it's more consistent. It's definitely more consistent than some of the ones we've seen. After 5 years, your $10,000 is now $31,000 for a 211% return in 5 years, which is phenomenal, by the way. An average return of 25%. And your total dividend payments, you've been paid $19,000 in dividends. Moving forward, your annual dividend income is going to be nearly $8,000. Absolutely insane. We jump up to 10 years, and I mean, it just continues to compound insanely well. You're now sitting at just under $100,000, which is remarkable. Your total dividend payments are $78,000, and your annual dividend income now is $25,000 a year, which again, you still can't live off of, but after 10 years, you're going to be getting some insane compounding. Kick it all the way up to 20 years, and we're just under $1 million. And that's the thing. That's the difference between these. Because we've seen this thing in such a terrible market, it is capable of doing this, I would say. I mean, it could be tough. We would definitely need a really solid market, but I wouldn't write it off completely. It's a low chance, but you never know. Pretty insane. $943,000 off of your $10,000 investment. You've been paid $840,000 in dividends, and now your annual dividend income, $240,000, which even with taxes, which I don't have taxes calculated in here, you're still definitely able to live off of that. But let's say you want to shoot for the stars. Let's say you're 25, you want to retire at 55, and you want to live the life of luxury. You want to have a lot of money coming in. You want it to be consistent, And we have SPYT perform the best it's performed. It has solid continuous dividend returns of just under 23%. And we continue to see the price just trade sideways. Again, the price is not even going up in this scenario. So 30 years, what does it get you? Can we live off of it? Absolutely, we can. Your ending balance is $9,159,000. Total dividend payments over the 30-year period, $8,226,000. The real insane part here is the annual dividend income moving forward is $2,337,987, more than enough for someone to live off of if they want to have a nice house, a crazy car payment, and go on a ton of vacations. Even with taxes, you're still getting an insane return, which is the point of this fund. It's for that 20% consistent return, which I love to see. And if they can do it, it would definitely be one that I would consider buying for the long term and holding. Again, these returns, it is really, really insane the potential these funds have if they can keep up that 20% return in all markets. I hope you guys enjoyed this video. Of course, I am not the biggest fan of Defiance, but SPYT is one that I am a fan of. So maybe that will change in the future with Defiance if they keep putting out funds like this one. I hope this was informative and educational. Again, if it is, don't forget to like the video and to subscribe. Give me any feedback down in the comments. I always appreciate hearing from you guys, seeing what you're buying, seeing what you're watching on the market, because there's so much going on. Even in these red days, I'm buying as much as I can while still being able to make my mortgage payment, of course. So thank you guys so much for watching. I hope to see you in the next video.